After making some videos on small cap companies like Tenet Fintech and Doc, I wanted to make a video showing my whole portfolio and make sure that people realize that I don't just own small caps and they're actually a small part of my portfolio. I did find it really beneficial for me making those videos to help fully understand why I own them and dig into the details a little bit more. If you can articulate something to other people, then you understand it reasonably well. So the top 15 positions, which is the largest, a large percentage of my portfolio, are here, and I'll kind of go through them in groups of 5. My general rule, which I'm breaking, is trying not to have any position go over 10%. So I currently have 2 companies that are breaking that rule. One is Tesla, that I've obviously been quite invested in with an 18% position. I started this in 2019, I believe, and certainly I've had lots of luck and success with Tesla. I have bought some options on Tesla, long-dated options that have worked out fairly well. I only buy sort of 2-year options on Tesla, but often sell them within 6 months to a year whenever I hit the target that I've set. I'm also sort of breaking my rule on Whitecap. I did pick up 5,000 shares in 2020 at $1.84 and haven't started selling it off yet. If Whitecap got over 12 to 15, I'd start rolling off some of those shares and trying to bring this back down. I still want to keep a reasonably strong oil weighting at the moment. Okay. So kind of looking at the whole thing, again in groups of 5. Tesla I sort of talked about. I'm certainly taking it on the chin right now, down about 50% for the year. I'm slowly just adding small amounts of shares. I've done 5 buys over the year, which is 100 shares in total, split adjusted. Some of them were before the split, and I currently have 1 call. When Tesla fell from $1,200 to $900, instead of buying more shares, I bought a $900 call that expires in January of 2024. So I've been pretty beat up on that call. I now have 3 calls since it's been split. I haven't bought any Whitecap in the last year and a half, since 2020. So I bought my Whitecap once I saw that oil wasn't going to bankrupt this company. So it fell to like minus, I think, $30 or $40 that one day. And then in May of 2020 is when I picked some up. It's a fairly conservative company, and once I saw bankruptcy wasn't going to happen, I bought some. Constellation Software is probably my number 1 favorite born company. I've made a whole video on Constellation Software. I try to pick up 3 to 5 shares a year. I only have 24, I believe it is, and I picked up 3 this year. So again, my number 3 position, but probably my favorite stock. My blue boxes here are the companies I have no intentions of selling and want to hold long term, at least towards retirement. Now, my goal when I get to retirement is to only own dividend-paying stocks and to live off the dividends. So Tesla, unfortunately, will have to go someday in retirement. As much as I might like the company, unless it starts paying a yield in 15 years, it just can't stay. Whitecap is in my dividend sort of tag, but not in something I want to hold forever. I might, but it's not a for sure. Most of my biggest mistakes have been in commodities, and I try to stay away from them as a general rule. Brookfield is one. It's got the blue box. I want to hold forever. Love Brookfield Infrastructure. Nice dividend growth. 2 companies I'm a bit torn on that I like is both Lightspeed and Shopify. I've picked up a lot of Shopify, more than doubled my position. My buys this year have been between 35 and 20 or so. Some of these buys are in US dollars, some are Canadian, depending on the currency I have in the account I want to buy Lightspeed with. I've bought it on the NASDAQ or the TSX. So that's my top 5. They do regularly change as they go up or down. So mentioning I'm kind of a bit torn between Lightspeed and Shopify. Looking at those 2 companies, I certainly love Shopify going into the pandemic, loved their kind of consistent 40% growth, and then it exploded, both the growth and the share price. Currently, it's trading by my numbers at about 8.5 times price to sales using 2020 numbers. What I don't like and what concerns me about Shopify is their growth sort of falling down to 20-ish%. I'm modeling 20% for the rest of the year, but I really need to see this continue to go back up. Ideally, maybe low 40s, 30s. I don't know if that's going to happen. That'd be the ideal. Even back into the 30s would make me reasonably happy. Their growth falling from here will probably make me give up on the stock. As sort of seen by the 1,100 shares of Lightspeed I've picked up, I like that much more. Looking at their next year's numbers, which they have different quarters or end of year. Their end of year is until March 31st, so they're already into the 2023 fiscal year, and their price to sales using the numbers in front of you is 3. So currently I'm not buying any Shopify and haven't in a while, but have been slowly adding Lightspeed. The green numbers that you see for Lightspeed are actual revenue in millions, and the yellow is my sort of very rough guesstimates. Okay. These don't have a high level of precision in them. So my next 5 are TD, which I want to hold sort of forever. I've got Shopify that I just talked about. It was a much larger position, was in the top 3 for a long time in my portfolio, but has fallen back. Crescent Point is sort of a holdover from my old commodity mistake days that I haven't sold. I have the word trade here. I would probably sell all of my Crescent Point on a continued strong oil rally. Oil companies have been working their way up slowly as oil has stayed sort of above $80 a barrel, even though oil's come from 120 a barrel down to 80 WTI. The oil companies have held up reasonably well. So I don't intend to sell Crescent Point now, but it's not in the hold long term. Again, probably anything north of 12 to 15, I'll start rolling the shares off. A new position, COVID position for me was Enbridge. I picked up Whitecap in 2020. Also picked up Enbridge. Oil is not going anywhere. Tesla's my number 1 position, so I certainly believe in the transition to renewable energy, but we need oil for decades, and we're going to need pipelines for decades, and I think pipelines are as hard to build as railroads these days. So I love their constant year-over-year dividend growth and want to hold this ideally to the day I die and will it to my kids and live off the dividends in retirement. I wouldn't make any comments about peak fintech, make lots of videos on that. Torn, this is now into my, sort of high risk. It's my 10th position. Now I'm into things that, trying to maybe 10x, taking a bit more risk, but if it goes to 0, it doesn't totally devastate my portfolio. So in the last year, I've picked up 150 shares of Enbridge. The Shopifys I regret a bit. I think I was a little ignorant of their price to sales when I bought these. And again, wish I maybe hadn't. I've certainly picked up a lot of Tenet Fintech over the year in 5 separate buys and have been hurt mightily on those purchases. Rounding out sort of the bottom half of the portfolio, I do have 20 total positions. A bunch of them are super tiny and in the sell camp. So a lot of dividend growth here. Brookfield, I love. There's so many Brookfield companies I'd love to own, considered Brookfield renewable, but don't want to own all of the Brookfield pieces. I just own the parent for their dividend growth, so they have a much smaller yield, but it grows. The growth of the dividend is fairly high, and own Brookfield more for the capital gain than the dividend. I am done with Bank of Nova Scotia. I must have held this for 10 years. I bought it for sort of the Latin American exposure, and it's massively down, I think double what TD is, or not quite double, but close on a percentage basis compared to TD. So this is in the sell camp for me, and I probably want to get rid of this and add Royal Bank at some point. That is not meant to be the ticker. And then the recent problem, Algonquin Power. Torn what to do with this. I do manage a little over $1 million for other people in a retirement account, so not a retirement, but in retirement account, and I'm pretty sure I'm going to boot out all of the Algonquin Power that I have in that account, because the whole point of the other account is for people to live off the dividend. There's probably going to be a dividend cut, and it's even before the fall recently, I was contemplating what to do with this, just underperforming so much the last year. So I still have it. It is no longer a blue box. I decided to leave it in and discuss it in the video. But anyway, painful point. Made lots of Cloudmd videos. I have picked up 10,000 shares of Cloud this year. I have this sort of number line on Cloud at 10% revenue growth. I think I'll get rid of it. So we'll see what happens over the next year and what Karen Adams can do. I'd love to see on the top end them get towards 20%. If they can start compounding at 20% year over year revenue growth and get to profitability, which they hope to by mid-year, I'll hang on to it. So we'll have to see where they end up in this sliding scale. Last of my top 15 is Telus. This is a new position this year. I owned it in the past. I got a little too biased. I did too well in 2019, 2020. Kind of made 30 to over 100% a year for a couple years. Got a little too tech heavy and booted out my Telus and Bell. And now I need to sort of go back to those dividend positions. Ideally, I'd love to be around 50% dividend payers. I'm a little bit below that right now. And then by the time I'm ready to retire, my whole portfolio would be dividend payers. So I'm kind of halfway. The yield on my portfolio, I think, is 1.99%. And ideally, when I retire, the yield will be around 4%, again, depending on the economy and the going bond rates. But that's my target. So definitely want to add to Telus. Really like Telus over Bell and Rogers, particularly Bell. They just grow too slowly for me. Telus seems to be much better run and have some other business segments, the healthcare, and they spun off their international segment. It just seems like it's a much better run company than Bell. So that's why I want to pick that telco to hold in the retirement account I run. And as I turn my retirement account into a in-retirement account, one of my rules is in retirement, every company has to raise their dividend every year. So Telus certainly fits strongly into that. And all these DIV purples are companies that raise their dividend every year. And again, Algonquin's kind of starting to fail that and soon going to cut it. So that's my portfolio, highlighting that I'm not just a small cap guy and that's all I own. Don't own a lot of small caps. Been generally burnt in the past, made a lot of mistakes in commodities, switched to other type of small caps. Had the Score, used their app and owned them for a while, and then they got bought out by an American company. And that one worked out well, and we'll see how Cloud and Tenet goes. So hopefully you found it informative to see somebody's portfolio, their mistakes, their down companies, and how they're thinking of adjusting it going forward. Okay. If you like this video, please consider subscribing to the channel.